Hello everyone, how are you all? Hope you are doing good and under results. So actually there were so many reasons for these huge breaks and I'm really sorry for that. I will try to be as consistent as possible. Just I'm not going to give up on this. Also, please like, share and subscribe to this channel. Plus, I have opened Telegram channel a couple of days ago and I've been sitting there for like 2 days alone. If you want, you can join there. Thank you again. Also, for these chapters, right now we are going to cover this chapter from ICAI material itself. Contingent asset, contingent liabilities. Why? Because I forgot the reason. Yeah, because these are small chapters, like 7-page chapters, which is why I'm going to cover here. I'm going to cover the MCQs and true or false here. And then there is another chapter, accounting policies. This is also 6-page chapter. Okay. Oh, wait. Yes, we got it like this. This is also 6-page chapter. So for these two chapters, I'm going to cover from ICM materials. You can ask me like you might get a doubt about what. Sir, you have completed 3 units without covering MCQs and illustrations. What about them? I'm going to cover those after the end of 7th chapter, I mean 7th unit accounting standards. Okay. After this, I'm going to cover the first 1, 2, 3 chapters MCQs and waterfalls and illustrations. For third unit, there are so many illustrations, like around 10 or so. I mean, you can do it on your own, but it's fine. Let's do together. We'll do together. Also, I was worried about not being consistent and time I have been eating for you if you are watching only from me. But I thought today itself. This batch is end for 1 minute. Oh, sorry. Since this batch is end for what? January at students, it's fine. It's fine if we go a little slow. Okay. Just to try to revise all those concepts. I'll try to revise. Even chapter one is boring. I'll try to revise chapter one after completing the entire syllabus. I'll try to revise everything in those respective chapters. There are certain concepts I'll have to share with you. This is not the right time. We'll come across those concepts and I'll share with you. So first thing is contingent assets, contingent liabilities. What do you mean by an asset and what do you mean by contingent asset? To define asset, asset means which is held for use for a which is held for use or for production for a period of more than 12 months is an asset. I'm just explaining you the vague definition. But what is contingent asset? I'll tell you one more thing. This is the area where people get a little bit confused. Also, this is not much important in CA entire curriculum for CA Inter or CA Final because there are accounting standards and there are Indian accounting standards. We'll talk about those later in Unit 7. This is included in your syllabus, in your CA Inter and CA Final, but they are not exclusively asked. These are not red mark areas, but we have to understand the essence of the thing. Contingent asset. What is contingent asset? A possible asset. It is not exactly an asset, but it is a possible asset. that arises from past events. Let's decode this. First of all, CA. CA means not exactly chartered accountancy. Okay. Whenever you come across a definition, just write the way I'm writing here. Okay. Just instead of making it form a pair, just make it a flowchart. A possible asset. A possible asset from past, I guess, arises from past. Okay, wait a minute. Arises from past and existence will be confirmed only after occurrence or non-occurrence. Oh my God, there's so many things. Possible asset that arises from past events and that can be confirmed. Just a dry box that can be confirmed by occurrence or non-occurrence of certain event, I guess. Of yes, one or more future uncertain events. Hmm. So, contingent asset is, I will explain you later. Just clear your mind and listen to what I'm saying. An asset, a possible asset, not exactly possible asset, possible right, okay, whatever it is. Possible asset or possible right, whichever is, like, whichever works, it's fine. A possible asset that arises from the past events. What do you mean by past event? Past event means Basha movie flashback, conformed with by occurrence or non-occurrence of one or more future uncertain events. Example, imagine you made a lawsuit. Just to write this in your essay material or in your white notebook. Maintain notebook from chapter 2, okay, for practical purposes, because just to solve the problems as the way I'm solving, so that you do not have to even revise, like revise. Not exactly, I'm not telling you to not revise. It doesn't, uh, it will add benefit for you during revision. It takes like very less time. You should, what you should, or you made a case on someone on X, okay, for 1 lakh rupees, whatever reason. Okay, you means your company. So, should, it is a past event, okay, confirmed by occurrence or non-occurrence. What is occurrence or non-occurrence here? Court, court may uh, make them pay you, make them or order them to pay you 1 lakh or not pay you 1 lakh. This is occurrence, this is non-occurrence, okay, of one or more future uncertain events. What is future uncertain events? Is court judgment. Just to close your eyes and tell yourself, like, contingent asset, potential asset, possible asset that arises from past event. Past event means we sued someone. We sued you to make me to pay me 1 lakh rupees. confirmed by occurrence or non-occurrence, the order of the court. What is the order? To pay you or not pay you? One or more future uncertain events. Now the question is, let's just read here also. Possible asset that arises from past events and existence will be confirmed only after occurrence or non-occurrence of one or more future asset, future uncertain events. Contingent liability means possible obligation. Just this is the only change. What is obligation? Obligation means a responsibility for an asset. For an asset, we have right. I have right to uh, use a machine. Okay, but I don't have right to repay the loan. It is not my right. It is my responsibility. My responsibility is to repay the loan you have given to me. Right. So contingent liability is possible obligation arising from same definition past events, and may arise in future. It is about past events or may arise in future or future. There is something here we have to discuss. Depending upon contingent asset is past. This is past or future, depending upon occurrence or non-occurrence of one or more future uncertain events. Right? So just keep this in mind. Contingent asset is now shown in balance sheet. Okay. How about contingent liability? Contingent, okay. Liability is not shown in balance sheet, shown in notes to accounts. Not shown in notes to accounts. Contingent liability is not recognized. Why is it not recognized? If you remember, we have talked about the concept of prudence. Okay. Basically, principle of conservatism, negativity. We fill up our balance sheet with full of negativity instead of positive aspects. Like our potential income which we might earn is not recorded, but our potential loss which we might earn lose is recorded. Sir, you have said potential loss which we might lose is recorded. Then why is it recorded in notes to accounts and not in balance sheet? That is a wonderful question. Further, we need to understand the proper full definition of contingent liability and then the provision. This is the last concept of this chapter. Okay. Next, what was it talking? Yes, just to change. For contingent liability, it is shown in balance sheet. It is not shown in balance sheet. Most often is okay. So 1 minute. Contingent asset may be defined as possible asset that arises from past events, as we talked about it, whose existence will be confirmed only after, just read this later. Occurrence or non-occurrence of one or more future uncertain events. Not wholly, which this is more important, which is wholly not in the control of the enterprise. It usually arises from unplanned or unexpected blah, blah, to the possibility of an inflow of economic benefits of business entity. For example, a claim that arises and okay, this is what we are talking about is pursued through legal process where the outcome is uncertain is a contingent asset. Legal claim. We talked about suing, it is a legal claim. We talked about prudence concept. An enterprise should not recognize contingent asset. These assets are uncertain and may arise from a claim. which an enterprise pursues through a legal proceeding. I talked about here. There is uncertainty in realization of claim. Okay, we may or may not receive the amount of claim because it depends on the court order. Just to remember that example. It is possible that recognition of contingent asset may result in recognition of income that may never be realized. Prudence concept. However, the realization of income is virtually certain if then the related asset no longer remains a contingent asset. Okay, you got this? It is not disclosed in the financial statements, which is notes to accounts. Is not usually disclosed in the reporting authority. Is usually, sir, is usually disclosed in the reporting authority. If an inflow of economic benefits is probable, basically, what is approving authority or reporting authority means, okay, here is the board of directors. Actually, for companies, there are primarily two kinds of meetings will be conducted: board meetings and general meetings. Board meetings are conducted by board of directors. Who are board of directors? We'll talk about this in the 11th chapter, company accounts. Okay, 1 minute. Sorry. Basically, approving authority means the board of directors. It is usually disclosed in the board of directors report. Okay, whenever there is a meeting, whenever they conduct a meeting, they issue a report, they provide a report for transparency purpose. We'll talk about this in the last chapter. And this is contingent assets. We have done till here. 1 minute and so. Sorry, there are contingent liability, the possible obligation that arises from past events and the existence of which will be confirmed only by occurrence or non-occurrence of one or more future uncertain events, not wholly in the control of the enterprise. This is the whole. Which is not wholly within the control of the enterprise. One or more future uncertainties. Okay. Possible obligation that arises from past event. Okay. I'm unable to see what thing I'm ready. Basically what I'm trying to say is that this is the definition of contingent liability also, but it is not an asset. Liability is never an asset. So here it comes the obligation. Just to write the way I wrote, not the handwriting. Okay, you cannot. No one can understand. It's just to write the concept, write in pictorial way, like contingent asset is an asset. Blah 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 blah. Not like this. Contingent asset, a possible asset, right? Like this. Okay, arises from. So whenever you recall, it will be easy for you to recall the definition for occurrence or non-occurrence of one or more future uncertain events. Okay, this is how you write. And for contingent liability, it is a possible obligation. Okay. Also, for contingent liability, the possible obligation is one of the definitions, not entirely the only definition. Okay. Also, there is another thing I want to discuss with you. For contingent asset, the potential possible amount you may receive is contingent asset, which we are not going to recognize in balance sheet or in notes to accounts. For contingent liability, we may potentially lose. Just reverse the criteria, reverse the example. We may potentially lose the 1 lakh from the person who sued on us. Not we suing them. We are not suing them. We did not sue them. They sued us. Okay. And we might lose. Okay. This is the definition of contingent liability. One of those definitions. There are another definition for contingent liability. This is the second definition. Present obligation. We have talked about possible obligation till here. And here, present obligation. If it is present obligation, shouldn't that be the primary liability instead of contingent liability? That's exactly the doubt I have got. And the answer, God knows. A present obligation that arises from past event. Here, possible obligation that arises from past events. And here, present obligation arises from past events. Till here, it is normal liability, not a contingent liability, but is not recognized. We have doubt. Sir, we should recognize because due to past events. What is a past event? For example, I have taken loan from you 2000, 2000 years back. So that is the past event for which the present obligation. Even today, I have liability to pay you. I have responsibility to pay you. But isn't this the normal liability, not exactly a contingent liability? Your answer is right. This is normal liability. Till here, it is normal liability, but is not recognized because it is not probable that outflow of economic resources, okay, outflow of resources embodying economic benefits, which means basically they are trying to say cash payments, paying cash or paying money, okay, will be required to settle the obligation. Okay, this is one of the most important lines. Present obligation arising from past event, but is not recognized. Why is it not recognized? Because it is not possible, not probable. It is not probable that cash payments will be required to settle an obligation. Okay, so we do not know, or there might be a very, very less chance of repaying the amount to settle the liability. What do you mean by settle? To repay the liability or reliable estimate of amount of obligation cannot be made. So for example, someone sued us for around 1 lakh rupees. Court may exactly make us pay or verdict us to pay 1 lakh rupees or 80,000 or 60,000 or 59,999, etc. Right? So how do you exactly know how much amount we might pay? How much amount court might order us to pay? We do not know, right? Which is why we estimate with the probabilities. Okay. The reliable estimate might not cannot be made. Reliable estimate is not exactly possible. Okay. I will put it in another way. Okay. If you are confused, okay, will this is the example you read by yourself. Okay. First definition, I'm kind of sure you know about this. But for second definition, present obligation arising from past event, which is normal liability, but it is not recognized. Why is it not recognized? Because there are two reasons. First one, The estimate is not cannot be made. Reasonable estimate cannot be made. Reliable or reasonable, whatever. Of amount of the obligation cannot be made. Like if you do not know the amount which you might have to pay, how can you recognize it in the balance sheet, right? For example, in balance sheet, for example, in balance sheet, there is inventories, right? If you do not know the amount, how can you show this in the balance sheet with no amount? Which is why it goes to nose to accounts. Okay. So first point is if you do not know the amount, basically reliable estimate of amount cannot be made. Second point is it is not probable that cash payments are required to settle the obligation. Okay. Like in order to repay, it is not probable to repay with cash. If just to read this example, if you if you are unable to comprehend this example, just let me know. Just a comment below so that I will explain it to you again. Contingent liabilities and liabilities differences. The distinction between liability and contingent liability is based on management judgment. What do you mean by management judgment? That is a really nice question. We'll talk about this later, like KGF2. Just to keep this in mind, uh, balance sheet, like financial statements, are not solely based on the technicality. These are based on the judgments by the management. Who are the management? The person who is conducting the business and the person who is above or below of that person. Who is above or below of that person. These people decide and judge what is to be shown, how is to be shown. No, 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 not exactly. Like certain things the people decide. What do we call this? We call this accounting estimate, which comes to in the next chapter. We'll talk about next chapter later, I guess, for tomorrow. And a liability is defined as present obligation, financial obligation, obviously, of an enterprise which arises from past events. We talked about this before. The settlement of liability results in this is basically cash payment. Okay, just to write in your notebook, outflow from the enterprise of resources embodying economic benefits is basically cash payments. But do not write this in exam. If they ask you the definition of contingent liability, just don't write cash payments. You have to write this in order to for you to understand. I'm just simplifying this as cash payments. On the other hand, in case of contingent liability, blah 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 blah, not probable. Okay, cannot be measured with sufficient reliability. This is the example. Read this at home. And then there is another terminology, provision. Basically, provision is something. How can I say? In the second definition, if delete the word cannot, a reliable estimate can be made is a provision. Also, it is probable that cash payments will be required to settle an obligation is provision. I will briefly brief you after discussing this topic so that you do not get confused. Provision means any amount written off or written by of providing for depreciation, decrease in the value of an asset or retained by way of providing of any other liability. Just kill this. Provision is present liability of uncertain amount which can be measured reliably by using degree of estimation. Substantial means huge, big. is a possible obligation that may or may not arise depending upon the occurrence and non-occurrence. We just write the definition. But here provision is present liability. Provision, once we recognize provision, it comes under liabilities in the balance sheet side. So it is a present liability of how much provision. We talked about this. Depends on management judgment. So we do not exactly know the amount, which is why we use a substantial degree of estimation. This is very beautiful word. We do not understand a single meaning, a single word's meaning, contextual meaning. What is degree of estimation? It is basically an estimation. Substantial means important. It meets the recognition criteria. What is recognition criteria? The 2 points in the present obligation of current liability we have discussed. It fails to meet. Is recognized when enterprise has present obligation, outflow of economic resources, probable, reliable estimate can be made. This just use the word not. Okay. If the management estimates that it is probable that the settlement of an obligation will result in outflow of benefits, it recognizes in the oh, this is a spoiler. I just wanted to surprise you this. Okay, just read this point. This is example. Oh my God, chapter is completed. First true or false. Contingent liability need not be disclosed in the balance sheet. Financial statements. Contingent liability is not, yes, I think yes, these are not disclosed in the financial statements. So this is answered true. Oh my God, wait a minute. What do you mean by financial statements? If you remember, I told you financial statement includes 5 things: profit and loss, balance sheet, notes to accounts, and statement of changes in equity and cash flow statements. They said in financial statements, not in balance sheet, right? Oh my God, let's read this again. Contingent liability is not disclosed. I think we talked about this. It is disclosed in the notes to accounts, I guess, right? Yes, this is false. Provision fails to meet the record. Okay, we read this again. This is false too. Okay. So, okay, this is the second question. A claim that enterprise is pursuing through legal process where the outcome is uncertain is contingent liability. Oh my God, where the outcome is uncertain. Is it contingent liability, do you think, or is it provision? I think it is provision. Let's recheck this. Oh, sorry. I have not read this properly. Claim that enterprise is pursuing through legal process. Outcome is uncertain. This is not a liability. Like we might receive, not we might pay. Okay. This is also false. When it is probable that firm will need to pay off the obligation that gives rise to contingent liability. Also obviously false. Present financial obligation of an enterprise which arises from the past is termed as contingent liability. Is it right? We discussed about this. This is also false. I think we might have to write the definition completely. Okay, normal liability. Okay, they have not written the definition. Hmm. Contingent asset usually arises from unplanned or unexpected event that gives rise to possibility of economic inflow, outflow of economic. Like contingent asset which might give us to receive cash or to give cash, receive cash. So answer is A. Let's check this after reading all this. If an inflow of economic benefits is probable, then contingent asset is disclosed in financial statements or no. Cash flow statements? No. Then the answer is B. Approving authority. Remember we discussed about board of directors. In case of dash, outflow resources to the is not probable or the it cannot be measured reliable. Obviously, current contingent liability. Present obligation of uncertain amount which can be measured reliably by using substantial degree of estimation. We talked about this in here. Degree of estimation, okay? If you want me to go slow, just let me know in the comment below. Oh, sorry. In the financial statements, contingent liabilities recognized obviously or not recognized or adjusted. Let me think. I think this is a tricky question. In financial statements, contingent liabilities. Okay, here they talk about disclosure. Here we talked about recognition. That is why I'm getting. I got confused. Sorry. The answer is B, I guess. Let's check. First one A, second one B, third one C, fourth one A, fifth one A or B. First one A, second one B, third one C, A or B. Because just understand the terminology here. They talked about disclosure. Here they talked about disclosure. We do not disclose anywhere. We do not disclose in the. Hey, wait a minute. Need not be disclosed. Okay. This is fast. We need to be disclosed. But what we talked about is recognized. Contingent liabilities. Is it recognized? If it is recognized, then it becomes provision. If you remember, provisional criteria for provision, recognition criteria has to be met. So a contingent liability, if it is recognized, it becomes provision. So briefly talking, I will just summarize you this entire chapter in 3 lines. Contingent asset, contingent liability, provision. Balance sheet, notes to accounts. Nope, nope, nope. Yes. Okay. Just read this because these things will be very helpful in the last day of your exam, like last but one day that for your revision. Okay. So contingent asset in balance sheet not shown in notes to account not shown. Contingent liability balance sheet not shown. Notes to accounts will be shown. It is shown and not shown. Okay, done. Please like, share, subscribe, and join the Telegram channel so that we talk about. We share. Oh, we do not share books. We share. We share money, right? So anyway, I think this class. Hopefully, this class wasn't as boring as I felt. If I was a student like you, I would definitely skip me. Thank you for staying this long, and we hope things might turn out well. Hope you follow me properly and you get 17 marks so that I can show off like a student. It makes me not exactly proud, it makes me worth of myself. I'm not nobody. Like imagine if you get 14 marks. Oh, 1 hour, 39 minutes opposite. How I said. Imagine if you get 70 marks and you reach out to me, I'd be like, okay, I'm not that useless. I might help people. So there are so many reasons I'm going free on YouTube. And also, after this, I'm going to conduct free classes for accounts for intermediate, accounts for CFNL, which is sorry, financial reporting, audit for CA inter and CFNL, GST for CA inter and CFNL, financial management for CA inter, and advanced financial management for CFNL, which cover almost 70 to 80% of your entire CA curriculum. Plus, if possible. I'm not that strong in income tax. Although I got 60 exact 60 marks in CF final. Let's see if for income tax it is the act applies for you might be 2025 act, not 1961 act. Okay, anyway, we'll talk about this later. Okay, take care. Bye.